Welcome. In this video. Is Xcn coin preparing the ground for the rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. One of the important structures that stood out on the chart was the ascending channel pattern that had clearly formed in the past. This channel clearly showed that the price had been moving between two parallel bands that worked as both support and resistance for some time. The upper band of the channel represented the buyer's boundary, while the lower band was the seller's boundary. This is a critical technical pattern for traders to read the market direction more clearly. The price fluctuated regularly within this channel for a long period of time, at times approaching the upper band and encountering resistance, and at other times touching the lower band and finding support. These movements offered traders the opportunity to trade within a certain range. However, in technical analysis, not every channel structure lasts forever. The equilibrium within the channel is broken at some point, and this breakdown usually manifests itself in a sharp breakout. In this case, in the last move towards the lower boundary of the channel, the price could no longer draw strength from that support and broke the lower band of the channel downwards. This breakout signals that the structure is no longer valid, and the price may now enter a deeper correction or downtrend. After this breakout, the price moved rapidly downwards as predicted, confirming the technical structure's signal to investors. Such breakouts not only indicate the end of the past channel structure, but also provide traders with a basis for developing new trading strategies. Especially in geometric patterns such as channel structures, the moment of the breakout is of great importance. This is because it signals the start of a change and often signals the beginning of a new trend. A break of the lower band of the channel is a serious warning for traders, as it indicates that the market is no longer able to maintain support levels and that selling pressure is gaining weight. Therefore, in channel patterns, it is not enough to focus only on the movement of the price within the band. It is also important to carefully monitor when and how these bands may break, because a break of the upper or lower boundary of a channel is usually considered as a new directional signal in technical analysis. A break of the lower band can be a harbinger of a sell-off, while a break of the upper band can be a strong signal that a new bullish wave has begun. As a result, such channel structures play a decisive role in technical analysis. However, they can have a limited lifespan and can always break down at a certain point. That's why it's important for traders not only to build a buy and sell strategy within the channel, but also to be prepared in case the structure breaks out. For this reason, the breakout points should be closely monitored along with the channel support and resistance lines, but we can't decide the analysis only with the breakouts. Let's look at the other metrics. Keep watching. When analyzing the chart, a potentially significant formation appears to be developing, an inverse head and shoulders pattern. This formation is considered a strong reversal signal in technical analysis and typically appears at the end of downtrends, indicating a potential shift to an upward trend. Looking at the current price action, it's clear that the formation is not yet complete, but is gradually taking shape. From the current price position, it seems that the head part of the formation is being constructed. That is, following the previous decline, the price has formed a new low, which is positioned lower than the previous shoulder level. Such inverse head and shoulders patterns should be monitored closely by investors because these structures are among the earliest signs of a trend reversal in the market. At present, the price is fluctuating at the bottom of the head portion and attempting to stabilize. This region can also act as an important psychological support, as investors may view this level as a bottom and begin increasing their long positions. This buying pressure may eventually lead the price to gain upward momentum and start forming the right shoulder of the pattern. For the pattern to complete successfully, the price needs to recover from this point and move upward again, forming the right shoulder at a level similar to the left shoulder. Following that, the price is expected to approach the resistance level referred to as the neckline. This neckline typically connects the left and right shoulders in a horizontal or slightly sloped manner and is a critical level. A breakout above this line confirms the completion of the pattern and signals the start of a strong upward movement from a technical perspective. The possibility of pattern failure should also be considered. Volume analysis plays a crucial role here. A noticeable increase in volume during the formation of the right shoulder, and a clear surge when the neckline is broken strongly support the validity of the inverse head and shoulders pattern. If such volume support is absent, the likelihood of the pattern being invalidated increases. Currently, the price being at the head region may indicate that a window of opportunity is opening for investors. Price behavior in this area should be closely observed, with attention paid to possible reversal signals and buying pressure. If the price successfully completes this formation, and breaks above the neckline, a significant upward move is expected based on the target projection of the inverse head and shoulders pattern in technical analysis. Typically, the depth of the head is measured and added upward from the neckline to calculate the potential target. In conclusion, the current price position may represent the formation of the head, one of the most crucial components of the inverse head and shoulders pattern. Carefully monitoring this pattern, analyzing breakout levels and volume support, will help investors make more informed and strategic decisions. If the process unfolds as expected and the pattern completes successfully, it can be considered a highly positive signal for the market. When examining the MACD indicator, a notable development can be observed in the underlying momentum of the price movements. There has been a crossover from below between the MACD line and the signal line. Such a crossover is generally considered an important signal indicating the beginning of strengthening buying pressure in the market. In other words, this crossover may be one of the first signs that the price is escaping downward pressure and entering upward momentum. However, another important detail to note is that this crossover has occurred while the MACD histogram is still below the zero level. So, although the indicator has initiated a positive move, it can be interpreted more as a recovery signal. The real momentum is expected to come when the MACD line successfully rises above the zero level. This is because the area above zero marks where buying momentum clearly dominates. Breaking above this level typically signals the beginning of a strong upward trend. MACD crossovers occurring below the zero line are often regarded as early indicators of potential bottoming in the markets. These are times when prices are attempting to recover from oversold conditions, and investors may start taking risks by entering positions. The current situation appears to reflect a similar scenario. Especially with the MACD line crossing above the signal line, it is a technical indication that selling pressure is decreasing and buyers are slowly starting to take control. If this upward movement continues and the MACD line manages to rise above the zero level, this would not only confirm the uptrend, but also signal that the trend is gaining strength and turning into a more powerful upward movement. During this process, a growing histogram further supports the momentum. In particular, the histogram crossing above the zero line technically confirms that the bullish trend is strengthening. At this stage, it is important for investors to confirm this development not only through the MACD crossover, but also with other technical tools. For example, an upward breakout in the RSI, increased volume, the price-breaking key resistance levels, or the activation of pattern targets. All of these, when evaluated together with the MACD crossover, can lead to stronger and more reliable outcomes. In conclusion, the current MACD setup is showing the first sparks of a positive move. If this upward crossover progresses above the zero level, it may lead to a more defined uptrend and a momentum-driven price increase. However, this scenario becomes stronger if accompanied by supportive volume. Therefore, investors should closely monitor this technical development and remain alert to potential reversal signals. Staying attentive to the MACD indicator is essential. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.